Self-managed superannuation, or an SMSF, is the best long-term wealth creation vehicle, allowing you to accumulate wealth in a tax-effective, protected environment. First, you need to determine whether a self-managed super fund is the right super fund and investment vehicle for your needs, and then you can maximise your long-term wealth creation using an SMSF. You need to take into consideration all the personal financial issues in your life: home ownership, debt, superannuation, personal insurance needs and estate planning. The key benefits of an SMSF include control, tax effectiveness, asset protection, investment choice, the ability to gear and advanced strategy planning opportunities. Superannuation is a tax-effective investment environment. A maximum tax rate of 15% applies to super funds. They pay 10% on capital gains and pay 0% tax when in pension phase. That's right, no tax. Compare this to the top marginal tax rate of 46.5%. The difference in these tax rates makes including superannuation in your long-term wealth creation strategy a must. A self-managed super fund adds even more planning opportunities. Control is one of the main reasons that existing SMSF members list as why they move to an SMSF. With a self-managed super fund, you are in control of what assets your superannuation is invested in, and you can make decisions to buy and sell at any stage. A self-managed super fund can invest in direct property, shares, managed funds and even collectibles. One great advantage of an SMSF is the ability to borrow to invest. This means that the typical investment strategy of gearing into an investment, even negative gearing, can now be done inside the superannuation environment. You can own an investment property using your super. Before making any investment, professional advice should be sought to determine whether that investment should be made inside or outside of super. Are you using the correct structures for you in terms of asset protection, flexibility and tax planning? Anyone making an investment should ensure that they are using the correct structures for their needs. Superannuation is a protected environment. It's safe from creditors, it's safe from bankruptcy. Protecting what you have is critical. What if something goes wrong? A death or disability to you? Are your assets protected? You need to build your wealth on a solid foundation. You don't want to build a house of cards that collapses and you lose everything, including your house and all your investments, if something goes wrong. You can use your superannuation to fund life, total and permanent disability, as well as income protection insurance. Advice should be sought on the best way to structure your insurances, as well as the correct levels of cover and recommended insurers. You need to be creating wealth, which is part of your retirement planning as well as your lifestyle planning. Self-managed super funds can form a key component to this planning. Using an SMSF allows you to combine resources with other family members, as an SMSF can have up to 4 members. As mentioned earlier, you can borrow to invest using an SMSF, and there are also tax-effective pension and estate planning strategies that can save hundreds of thousands of dollars in tax. Self-managed superannuation represents an enormous planning opportunity, and specialist advice should be sought to determine whether an SMSF is suitable for your needs and how to use self-managed super as your tax-effective, protected investment vehicle.